Yeah, so I referred before about the exponential growth in adoption. It's the fastest growth in history. We're currently at 150 million users. If we continue to extrapolate the growth rate, in fact, slow it down from 113 down to 83%, so knock it down by 20% or so, 30%, we get to 1 billion users by 2024. That's the nature of exponential trends, and 3.5 billion by the end of the decade. So if I then look and say, okay, if we're digitizing everything, and the digital asset space is essentially the digitization of value, that includes the securities markets, how big are they? So equities are about 250 trillion, 300 trillion, global real estate's 350 trillion, global bonds about 250 trillion. So if digital assets are truly the disruptive new asset class that basically absorbs all of those over time, is it so much to say that they could be worth 250 trillion? So that's 100x in market cap. So we will have never seen in human history an entire asset class grow in size by 100x in, I think, 10 years. So I look at log charts to give me a sense of trend. It's very important not to use linear charts because it keeps doing this and going up and down. But log charts are perfect to understand the most important thing, which is Metcalfe's law, which is network adoption is how you price cryptocurrencies, much like how you price Facebook, Google, and others. So Metcalfe's law is basically the number of nodes on a network and the interconnection between them. So you're basically looking how many people are using this, how many people are invested in it, how many people are using it, and what's the activity going on. That is the single most important thing, and you can estimate that, and that will give you trend. So I think trends of adoption are the single most important thing to look at. A nice logarithmic chart pretty much sums it up. Then after that, I will use on-chain analysis to try and see, okay, where are the tokens moving? Who's holding them? What is the growth in wallet addresses? And it's basically all the same thing. It's different ways of looking at the adoption. So those are the key things for me. When I say greatest pain is the general, we're not talking about the general investors now who already have tokens. That would be the sell-off. But there's not a lot of pain from a sell-off because most of us are in it for the long run, interestingly. So you get a bit of leverage washout from Asian leverage traders, etc. The pain is the fact that every institution is allocating and wanting to allocate. Many of them have the mandate, but institutions tend to do things on a quarterly or annualized basis. So they're all waiting for their 2022 allocations from their investment committees. And the worst thing for them is to see the market squeeze higher and higher in front of them. Also, a lot of hedge funds, for example, tend to, and the institutions tend to rebalance at the end of the year. Hedge funds will often close their portfolio because they start again in the new year with a new P&L. So the hard thing for them is if the market goes up in the last 2 months of the year and they're not participating. It's that kind of pain. I think the pain is to the upside because everybody is short the call option, as I say. They haven't bought enough of it and they know it, but they need to get round to it. So more pain is higher markets.
When do we see the 100K Bitcoin in US dollars?
I think we'll see that. I think by end of year. I think Ethereum goes over 10,000 this year. It was following very historic chart patterns. It's started to deviate a little bit. So it's been a bit slow where it currently is, same with Bitcoin. But I still think that generally at this historic points in these crypto bull markets, this December period tends to be extremely strong. I don't see any reason why it should be different. There might be some tax-based selling in the US and other bits and pieces, but I don't see a reason that it'll be wrong. And if it is wrong, it probably happens in Jan, Feb, March anyway. So it's like, does it happen in this last month or does it get pushed out a couple of months? Either way, it doesn't really matter because the year end doesn't matter to any of us, but that's the point. Although it matters to me because I own some Ethereum call options that expire at year end, so I need it to go. Ethereum ecosystem is a faster growing, deeper, richer ecosystem than Bitcoin is. So Ethereum is a very important part of this whole ecosystem. The move towards ETH 2.0 is a huge step in the right direction of the ability to stake and get yield. So it's creating a money market and a yield curve around Ethereum that doesn't involve DeFi. That's super interesting. And, you know, it'll become quite a deflationary asset. So what we're going to see is probably a lot of people staking, which we're seeing, all of these coins coming off exchanges, being staked, locked up in DeFi, locked up in NFTs, locked up elsewhere. And that means there's very little supply. There's about 11% of all Ethereum is available on exchanges to buy. So you put an institutional demand in the middle of that and there's not enough Ethereum. So the chances, the probability is the price rises all the way into ETH 2.0, whenever that is, somewhere between March and June. And then we've got this unique situation where everybody who's staked is still locked in for a period of time, but the rest of us know they're all going to be sellers after it because they want to release some of their capital. So the market will front run that because the market likes pain. So if you're locked in your DeFi contract, in your staking contract, the market will front run your selling and you'll be selling at lower prices. But from what level? That's the question. And my guess is that level is more likely to be 20,000 than 4,500. I have no idea. And I think people worry too much about this. All I do know is the size of the pie is increasing 100x. So if Bitcoin's dominance goes down and Ethereum's dominance goes down and Solana's dominance goes up, they're all going up in price, which is interesting. So we're aware of the trade-offs. The trade-offs are less decentralization equals faster blockchain. So that's basically the trade-off. And so people will take their choices. And so I think there's room for all. Now, I think over time, there'll be different adaptations and different chains will become larger that we aren't aware of right now, or maybe Solana does. The point is, I don't know. And that's why we need to have diversified portfolios in the space, keep an open mind, look at these network effects, who's getting adoption. Right now, it's very clear that the three tokens, layer ones getting adoption are Solana, Luna, Terra Luna, and Avalanche. And you'd probably say the Binance chain as well. So those four have seen huge adoption, but they're coming from a lower base. So you tend to get faster price rises coming out of them as well.